All right, let's go.
Okay. So what I try to do is use the new tool, the extension tool, to find where would be my exit, where would be my exit, right? Once I draw my fibs and I start with the entries, and so that I have kind of confirmation, right, beyond just the fib, on patterns, historical patterns on the chart. How high has it gone before it reverses or goes back down? So I can take a look at that and use that as I'm kind of like a secondary confirmation beyond just the fibs. So I started here with the first one. My first drawing here. It's a little bit messy because there's so many, but if we look at this one, the first one right here that I draw, I just went here and I looked at it, the first pullback that I get, and then I try to see historical patterns again. How did it do it this time around when I went for this move, and then same thing for this time around. How much did it do to retrace before it went down? So I kind of got two confirmations in there that would essentially say you have to exit right before this, because historically it's made this move up here before it reversed down and went downward with the downward pressure to sell.
So can you start from the beginning of that drawing? So what were you measuring? I think it's good to really understand what you were measuring.
Yeah, so I was measuring historically right before, how much has it continued before it reversed on the and went downward, right? And so I kind of used historical patterns. So for example, if I were right here like this and I didn't know, but I know I can enter, right? And I know I have this right here and I'm trying to decide where to enter right here at this low because I hit my 1, 2, right? And I enter right here. I'm trying to say, okay, when do I exit or when do I have to exit? And I look at historical patterns. So the first one I chose is right here to say, okay, it made this move and then it went down, right? And so most likely the chances are the chart is going to follow that pattern as well. And so I use this to kind of judge, okay, how much would this move be on this chart? And that's what this box gives me right here.
Okay.
It just measures the previous low to high before it went down to another low, and then it represents it on this chart right here, and that's what this move is here over
Okay.
here.
How about the
And
second one? I think I like that explanation. So can you go through that same process on the second one?
yeah, the second one is right here again. And maybe the second one actually isn't a good example now that I think about it, because it's this exact same move. So chances are, but I just drew it anyways to say, okay, even this move, like right before it, how much was this before it reversed? And drew this one as well. And that's the second box.
So if you click on the second box, so that move measured from, so that's the first. Which box are we on? The big line that starts at the bottom, right? If you just
This one?
go.
Yeah.
So the first line that you explained, right, just a minute ago, click on that one.
This one.
Right? Yeah. So which box is that? Is that the narrower box or the wider box?
I think this is the wider box. This box right here.
Yes. So the second box, I want to see how you measured it again. Or do you have a third box?
It's a little hard to click into it.
Yeah, I think you have three of them. Okay.
Yeah, it's like doubled up. It's kind of this with these drawings. It's kind of hard to
No, it's okay. It's okay.
see it.
Okay.
Maybe
So
I'll just go to this
you still
one.
have that one that is the tallest one. I want to see that one. What were
Yeah,
you
this
measuring
one.
on that one?
This one.
Yeah.
Yeah. So I measured this move right here
Okay.
on this pullback.
Ah, okay. Okay,
So
got it.
imagine if this was like this,
Yes.
all right,
No, no,
and then
got
we
it.
got
I think it's very good. And if you go to the right, if you keep scrolling, you will see that all those, most of those were hit,
mhm, yeah.
right? As an exit,
So
it has
you,
told you already,
yep.
for whichever entry you took,
Hmm.
you hit a good portion of your exit there, right?
Yeah. And then I have a second drawing as well right here. It's a little harder to click on, but
Yeah, it didn't go all the way up there, but
not as well, but it's just a good confirmation. And if you look at it even across, like, okay, maybe not this exit, but even for these other ones right here, this move, if you were to play it, it would be kind of a similar gauge, right? And then you can see right as soon as it hit these two right here, it automatically it reversed down. Maybe not reversed, but it went downward um, into the red.
okay.
And then moving forward, the next one I drew is right here. Um, so I wanted to measure um, what would be the the potential upward move. Where should I exit um, on this pullback if I were to enter? And then I used a couple of different measure points. I went right here for this one on this upward move, and then I also used this one as well from here to here.
Okay.
Again, it's not a perfect one. This is a confirmation, right, on top of the fib. But I just wanted to draw a couple different ones to see what kind of um, results I would get.
Okay.
And then moving on, and I want to try a few on the downward as well. So I went and drew this one. So I measured this move down and how much that would be if I were to play this going forward, and then same thing on the next drawing right here, or this one.
Okay.
On this move right here, what would that be represented if I were to enter here on the downside?
Okay.
And then I use the same ones as well for these two. So if I were to enter here to play the downside, what would be the move, or based off what happened on this move right here before it reversed to the upside, and then same thing on this one right here, and how much would that be on this move right here?
Okay. So, Nabil, did you do any of this?
I unfortunately didn't get a chance to practice.
Okay, it's not a big deal. So, let me take over the screen. So, the purpose of us using those extensions, like you said, man, is to measure historical moves to find potential exit areas in addition to what the fibs are telling us. You want to see in these extensions, it's not enough to say, I'm going to take this move and I'm going to predict it from here. I'm entering, I'm exiting. Yeah. Right? It's not enough to do that once. You have to see that history repeating. Because sometimes the moves are so small and they're so sporadic, you don't want to take those moves anyway. Like this move here, it's very small movement. Does it? If it repeats, you take it. But if it doesn't repeat, you don't want to take it. So it's important to remember that you have to draw multiple of these to look at historically what is this what kind of move does it make? Right? Not just a one-time big move or a one-time small move, but do those kind of moves repeat themselves? And so far, two of these are lining up. And you want to see a few of them line up before you pull the trigger. Right? Some of them are huge like this. And those could be anomalies, right? So you take some of these moves and you take them here. So then when you have multiple of them line up, you'll say, I better take at least my first exit there. Right? If you only have one, it's very hard to make a decision. It's good. The way you did the exercise is right. But I want to encourage you to keep looking at multiple possibilities, multiple options. Like, Bryce, what is this specific chart? What does it do historically? That's what you want to measure. Because your fib, like if you were playing this to the downside, and your fib says, this is where I want to exit, right? This is where I want to exit. However, I cannot wait until I exit here because historically it says I make these moves before I reach here. This is where our entry was. Did it reach here? Absolutely. Did it breathe before it reached there? Look, it went down here, it stopped. If you didn't take profit here, it could reverse, right? So you take some positions off. You tighten your stop. There's a big gap. You said, okay, I'm biased to the downside, but I'm taking my profit anyway, right? I'm not taking a chance because anything could happen. What happens next? It hit this next zone. Did it stop? Absolutely, right? It did not continue to our target. So this gives you an opportunity to look at the whole picture and say, these are possible areas where things pause. When I drew these, I drew them randomly. But you see how the whole chart respects them, right? You want to stack the odds in your favor. So that's why you do multiple of these. Say, okay, there's some confluence here, I better take some profit. There's something happening here, I better take some profit. So I keep trying a few of those. When you're doing it to the upside, same story. You have to follow same pattern, right? When it moves, when it makes this move, and I want to take it from here, this is what I better think about exiting. Can it go higher? Absolutely. Like this one went higher, but at least you're thinking about exiting, right? And you have, when you're doing multiple of those, you have this big move from here, there you go, right? So it gives you those signals, but those signals are your uh, guardrails, right? They give you possibilities where to be careful, where to watch out, where to take your profits, right? So that's why you try multiple of these to see, okay, what kind of move does this guy make before it pulls back, right? And see how a lot of them start to line up. When a lot of them line up, you just take them out. You can just keep one. You don't need to clutter your chart. But at least now you have something to look at and say, this is what I do. I just like to keep it this way. One trick I can tell you is there is, I don't know if this one does it, but on this one you can take out one line, right? You can take out the top or the bottom, whichever one you want, and say, you know what? I'm only worried about the exits, so I don't want to do, right? I don't want to do the top one. I only want to do the exit, right? You can just take a look from that side and have it less cluttered. Depending on which side you want to see, right? You can decide which side you want to see, but I suggest you see the side where you're going to take your exit. Right? That's the side you want to take a look at. So when you're drawing historically it has made this move, and from here I want to see, right? So you want to see your exit. So this one, by removing the one, it's not enough, right? So, right, if you just do this one, it's, oh, okay, this is where my exit is. I don't see the rest of the clutter, right? That's fine. But it's a matter of preference, right? So for me, I can see it. I know what I'm looking at, so I don't mind leaving it there. But here's a possibility. The most important part is not how the chart looks, is for you to have an area where price has done this pattern multiple times. If it's a fluke, I don't want to bother with it. Like this one, I can tell it's not a normal thing, right? So I don't even need to measure this. But if you measure it, you can see, boom, it stopped there. This guy right here. So I'll take everything out. Take everything out and show you again. Like this move. You measure it from here. That's where price stopped. You measure it from here. That's where price stopped. That gives you a good area to aim for without having to give back your profits, right? Without having to wait. If you're waiting for the fib to happen, right? You have taken your entry and you're waiting for the negative 272 extension for your exit. Yes, it happens, but what if it doesn't, right? What if the pattern tells you, you know what, I have a tendency to go halfway and I'm going to go down, right? So that gives you at least something to aim for, right? Adding to your tool set. Right? That's the purpose, is adding to your tool set. So you make it better and better for your decision making. Any questions? No questions? We're good?
No questions for me. Yeah,
All
I'm pretty
right.
clear.
Then now we can, you guys ready to do some more advanced stuff? How do you decide on when to enter? Is that what you want to do? Is that what I've heard a few times?
Yeah, I think it helps like connect, especially
Yeah.
like knowing a little bit from the entry and exits to connect back to what we've learned.
Yeah.
Even if I'm not fully, I wouldn't say 100% comfortable with the other part yet. I think it helps kind of bridge.
Yeah. No, it's good. So we'll just take some random spot, right? And we know we're gonna use the fib for our entry and exits. Like where is price pulling back to find support? As long as it doesn't break the 38.2, I know I'm gonna keep going down. I mean, going in that same direction, going up in this instance. And if it breaks the 78.6, I know it's a reversal, but until then, I'm going to assume it's going to go to the upside. So when you get to that area of value, right, that area of value for our purpose is when you get to a fib level, somewhere above the 78.6, right? Somewhere above that. When you get to an area of value, how do you take a trade, right? What is the indications that tells you I am in? So there are a couple of things you can do. One, remember trend lines? We always come back to everything that we have learned has a purpose. You draw a trend line. And that pullback, you draw a trend line of that pullback. As soon as you break and close above this trend line, you have an entry. That's one entry. Now this entry, remember, if we wait until here, we're giving up this $4 move. right? That's why we enter at the break of this trend line. So we're entering early. Sometimes you'll have such a big gap that you might not even take that entry. Like if this is too close to this high, I will just skip it. I'll just say, missed opportunity. Or I will wait for what it does at times when it breaks the trend line. It will break it. It will come back to test it and then go again. Right? And when this happens, I don't redraw a trend line here. What I'll do is the bar that tests this, a penny above that bar, I'm entering. Right? As soon as I get a penny above that bar, I'm entering the trade. Because I already have decided this was my entry. This break was my entry. I miss this entry, I'm getting at this opportunity, a bar, a penny above it, I'm taking that trade. What do I mean by a penny above it? As like just a simple example. These two bars, look at the highs of these two bars. If this was down up here, if these two bars were here, the high of this bar is 390.96. The high of this bar is 391.51. Right? It's more than a penny above it. So as soon as price goes to 390.97, I'm taking the trade. If this was here, right? So this is what I mean. So you look at this high, you take the trade. We'll get into these numbers that you see 1, 2, and 3 on my chart. We'll get into those as next steps as well. You can use those to kind of guide you. So the penny above means from 2 red it turns to 2 blue. That means this bar is higher. The high of this bar is higher than the high of this bar. That's what the blue at the bottom means. A 1 at the bottom means both the high and the low of the previous bar contains the current bar. It could not break above, it could not break below. That's what 1 means. A 3 means it broke both sides. So then a 2 at the bottom means it's breaking it to the upside. A red one at the top, it means it's breaking it to the downside. So you can use these once you get into the habit of how you trade. You can use these and say, hey, price has come down to a level that I want. So I want to show you an example. I want to show you an example, but I'm not seeing one yet. Because SPY has been making so many gaps. Okay, here's a good example. Here's a good example. So you have your fib, you're playing to the downside, price comes to the 38.2% retracement, and you want to enter, right? We're at the green zone. We're not going green to green, we're going to the downside, right? That continuation to the downside. And here's where I'm expecting to exit. Let's leave the extension that we talked about earlier out for now, just for the purpose of entries. So I'm at a point of significant area, right? Area of value. I want to enter to the downside. How do I decide to enter to the downside? This bar engulfs this bar. It's completely saying, hey, I tried to break above, but I'm actually breaking below. So you can use this bar to say, okay, is that as soon as it breaks it, you enter, or you wait for this bar to close, and at the open of the next bar, you enter. Right, so you have your entry. Instead of waiting down here, you're entering somewhere up here or somewhere here. So this is how you pull the trigger quicker. This is a lot more complicated than what I'm saying, right? Because the complication is you have to make a decision. You have to make a decision without seeing the rest of the bars, right? Everything else you can't see. You can't see everything else. You have to make a decision right here. Here's my fib. Here's my 38.2 retracement. I need to make a decision. What do I do? To put the point across even more. Here's a 3 that happened way up here. Here's actually the entry on a 15-minute bar. We don't trade 15 minutes, but I just want to show you how this thing works. So we got to 38.2. We were waiting for the downside. We see a 2 down. We see a 3 that retraces all the way back. I love this retracing all the way back because it gives me an entry. Instead of entering down here, I'm actually entering up here. When you change it to 1 hour, you'll see this is where you're entering instead of down here. You see how you get an early entry? Now, this difference is when you go from daily to hourly, you'll also see this difference. That's why I tell you to pull the trigger on the hourly, because on the daily you'll see it beautiful setup, but on the hourly you get a little bit of a quicker entry. So this 15 minutes is where, oh, okay. So price at an area of value. I did not break below this bar here. I'm not going to the upside, but I want to break this low. I don't break it here, but I break it here. So technically, you could enter here. When I break this low, this bar breaks that low, you could enter it. Technically, but where do you put your stop? Right? This bar could potentially stop you out. If you wait for this bar to close, and it doesn't close, above this line, it closes down here, you can take it as quickly as possible. But that's why it's a matter of preference. You have to decide, where am I wrong, and you have to put your stop there. But here's where you get 2 early entries. When you go to the hourly, here are your 2 entries. We're trading the hourly, so we won't see this. Our entry is way down here. But those who are trading the 15 minutes, they have a lot of room where they're making more profit, but that's okay. Their exit is also based on 15 minutes chart, so their profit potential is also much smaller. So don't worry about that. You just worry about, what do I do, right, on entry by entry. So this is where my entry is, and then boom, price goes to my exit. Exit 1, exit 2, right? Price goes to your exit. So we don't have to replay anymore. But I'm hoping that I'm clear now on how you should think about your entries, right? You have 2 options. I just gave you 2 options. You draw a diagonal. You draw your trend line, and when you break that trend line, you take it, right? You can see that multiple times. You draw this trend line. When you break this trend line, you take it, right? You can just keep doing that. You draw this trend line. If you break it, you take it. You don't break it, you don't take it. Here's another one here. You draw the trend line. When you break it, you take it. This one, actually, if I show you this one, I think you might be able to see some good example on this one. Am I going the wrong way? Okay, look at this one. So we draw our trend line. Price breaks above. If we don't enter right when it breaks, remember I said if it does this, then you take it here, right? Just recall that. So I'll just move this out of the way. It on the 15 minutes it did that. Jumped up, it gave you a pullback. It didn't come all the way down here, but it gave you an entry because it just didn't keep going down, right? So it reversed. So somewhere here gives you the confidence to enter and take it to the upside, right? So your trend line is good, or when you break above the previous bar, like in this instance, you see this bar is a 2 up, but this is a 2 down, so it did not break above it. Right? So I'm not comfortable before I break this trend line to go long. I'm seeing some sideways movement. I might say, you know what, if it breaks above this one, I'll take the entry because this is sideways movement. But this never happened. I mean, it did break it, but it went shot up because it's the next morning. And the SPY has been gapping up and down the last few weeks like crazy. So it gaps up, you make a decision, and you take those trades. So, questions on entries?
I have a quick question. On the downside, how would you draw the trend line? For some reason, I can't. How would you enter using a trend line on the downside? Can you just show us a drawing?
Yeah, same concept. Same concept. So you want to enter somewhere here, you're going to the downside. So you draw the trend line from the bottom. When
But that's
you
on.
break it, you enter. Sorry?
Can you show? Oh, I see. You're right. So you just draw from the bottom instead.
Yeah. So look, you want to go up, you draw high to high.
Yeah.
You want to go down, you draw low to low.
Low to low. Okay. Yeah. Makes sense.
You're looking for that price to do the opposite of the direction you want to go so that you can have an entry, right?
Mhm.
Instead of chasing, you wait for that pullback or rally, and then when you break the trend line of that rally, you take your entry. So you either enter when you break this line here, this bar broke that line, or you enter when this bar takes out this low, right? Both ways, it's the same concept, right?
Yeah.
You're entering somewhere in that vicinity. And so in these entries, it's never about picking the top or picking the bottom. It's about finding an earlier entry point, right? So you can never say, oh, I reached the 38.2, let me take this entry. That would be kind of foolish, right? Because you don't know which way it's going to go. That would be like gambling, right? A coin toss. But when you're at this area and say, are there other indications that tell me which way the price could go, then you take your entry based on that.
And then on your chart, would you move it after you see the play? Because it broke the 38.2. So technically, once you have clarity on what happens next, you're supposed to move it up. So do you just wait until the play, your move kind of finishes before you redraw?
Before I draw which one? The trend line?
Your fib.
Okay, so this trend line, once I take an entry, this trend line has no more purpose, right? It's done.
Yeah.
This trend line has no more purpose. So my fib, remember, so if so here's where the 38.2 is. I'm seeing a downtrend, but I need the next pullback before I move it. So it doesn't happen until here because I see this.
Yeah, in this example, I was just wondering in other examples if it's I guess
I don't move it just because I have entered.
Yeah.
Because when I have entered, this tells me where my exit should be.
Yeah.
I'm preparing for an exit when I have entered this position, right? And so until I reach to a point where, oh yeah, here's my exit, and price is pulling back. Okay, now I can move this.
Yeah.
Do I re-enter? Right, I can re-enter because you get different kinds of charts and candlestick patterns that you can look at. Like this is called an inverse hammer. When I get an inverse hammer, I don't need. So a lot of times, like if I'm at an area of value and I get an inverse hammer, I don't draw this. I don't do this. Nor do I look at this 2-3 business. I just say I'm taking this trade because it has said I'm gonna continue to go down. Could I be wrong? Absolutely, but that's not the goal. The goal is to be right most of the time, not to be right all of the time. But important when you if you think about hammers and inverse hammers. So here's a hammer, here's an inverse hammer. This hammer is in the middle of the trend, so I don't take it to the upside just because I see a hammer, because that's happening in the middle of that move. But this hammer is happening at the beginning of that trend. It's saying, hey, this bulls that try to take the price up, I'm going to reject them and I'm going to take the price down. Here, this bears are pushing price down, but the bulls stepped in and tried to take the price up. I would take this. If I was on the long side, if I was not bearish bias, I would take this. Because, it took a couple of hours, but we didn't even close below this bar and price went up, right? If I was bullish bias, I would take this. But those are the things that I look for is, do I have an indication, right, that tells me I'm at an area of value? Do I take this trade or not? Based on what the charts are telling us. Right here, I'm at the 23.6% retracement. I get a hammer at the top, I'm not taking it, right? If this was an inverse hammer, definitely I will take it. But as a hammer in the middle of the trend, I'm not taking it. Even this inverse hammer in the middle of the trend, I'm not taking it, right? I need to see this at an area of value. Is it a place where I want to enter? If I see it at that place, right? Remember earlier, I think it was you who asked me what happens if we get to 38.2. What happens then? If we get to 38.2 and I get a hammer, are we on the 1 hour? Yes. So if on the long term, right? I think it was the daily. Was it the daily? If we get, I know what it was. It was, what happens if we get to the pre-COVID high? If price comes down to the pre-COVID high and it gives me a hammer, and especially that hammer closes above the pre-COVID high, that's my entry. I'm definitely taking that trade. No matter what, right? I could be wrong. It doesn't matter. I'm taking that trade because I'm getting a hammer at an area of value. Where I said this is an area of value, I'm taking it. If this hammer happens in the middle of a trend, I'm gonna skip it. But if it comes down here, it gets a hammer and shows me a reversal, I'm taking that trade. Will I exit sooner? I might, right? Depending on what price does, I might exit sooner. Like I had left this supply zone for you guys to see today, where price continuously rejected, but this supply zone has done its course. So we added a lot of drawings today.
On that play on the weekly chart that you said you would enter after you see the hammer.
Yeah.
I assume you would enter to the upside, right?
Yeah, because I'm seeing a hammer at an area of value. When prices come down, I'm expecting that reversal.
Yeah. Yeah.
If I see an inverse hammer, price makes, look, high, lower high, and you get an inverse hammer, right? At a lower high, this is an area of value because it's lower high.
Mm.
It's not in the middle of, it's not in the middle like this, but it came to a high point. The bull said, hey, we're gonna keep taking price up. The bear said, no, you're not doing that, and they created this inverse hammer. Are you taking this trade to the downside?
Yeah.
Yeah.
Definitely.
And this would have worked out perfect, right? Because you got the hammer. Look, everywhere you see the hammer, just study it. If you see the hammer uh, coming down, pulling back to an area of value, and you see hammer, you take it up. Coming up to an area of value, you see an inverse hammer, you take it down. The hammer is one of my favorite candlestick patterns, by the way. Like, I prefer to take those over anything else.
Mm.
So if I get a hammer here, I'm taking it. If this happens in the middle, then, wait and see what happens. Right? Maybe the next one is we really want to come down to the 61.8 retracement. The reason why I am betting is not the right word, but like on the pre-COVID high, I think historically we have never seen this kind of move in this short of time. And so the market is saying, I'm just going to negate this move and start over. There's never been a time where we've had this kind of parabolic move. In one stock, pharmaceutical, you might see it, but the broader market, it has never happened. So that's why I think the market is saying, let's bring it back down here. Let's take it up realistically.
Mm.
Right? But we shall see. So I gave you 2 entries, right, today. Actually, 3. I gave you an entry by drawing the trend line. I gave you an entry by looking at breaking the high of the previous bar if we're at an area of value. And I gave you the third entry, which is the hammer or the inverse hammer. It really looks like a hammer.
Yeah.
Right? You can't make a mistake about it, right? It really looks like a hammer.
Mm-hmm.
It's either an upside down hammer or it's just a regular hammer, right? It really looks like a hammer. It doesn't matter if it has a small wick, at the other side, it's still a hammer.
Yeah.
Yeah.
Very nice. Very helpful.
That's your entry.
Yeah.
You can paper trade that. Put everything together and just paper trade it. I think that's how you practice is you see a signal, take it. Like when I say by take it, is you're here, you see an entry, you right click, and you say trade, buy, sell. You take the trade, because you're paper trading, and you instead of options you're doing the stock itself.
Oh, that's good
when you take a trade, if you let's say you're taking a trade to the downside, let's say you're taking this trade, you stop somewhere here, right above this high, you're giving it a breather right above the previous swing, and your fib has told you to exit here, and this is your trade. You put in your entry, you stop, and your target, and you're done.
I like those tools too. It's very nice how it kind of clear.
Yeah, I just did it the opposite way. I mean, I just took the upside, but here's your entry, right? Here's your stop, and here's your target.
It's cool.
And this tells you your ratio. You want your ratio to be about 2. But you line it up with your fib. If your fib says you exit at ratio of 1 to 1, you exit. Right? That's not ideal, but you exit because the fib says I'm exiting. Or some other thing is in the way and you're exiting. But take the trade. One thing I tell you is if you start taking trade, you better journal. Screenshot of why you took the trade, what the chart looked like. Notes. I took an entry at this day at this time because I saw this. Here's my expectation. As you take the trade, not after you exit. Here's my expectation. When you exit, right or wrong, why was I right? Why was I wrong? Right? You journal that. When you have a journal of about 50 entries, and out of those 50 entries, you can show that you are profitable, you can throw real money at it. That's why you journal, right? When you've pulled the trigger, you want to know why that trade was wrong. So you don't care on a trade by trade, right? Why was it wrong? It's not for the trade by trade, but for the overall consistency. Are you making a mistake consistently, right? That's what you're journaling. Or are you making the right decision and this last 10 trades just happened to go crazy? That's okay. That doesn't make you wrong. At least you have journaled it and say, hey, I saw this inverse hammer. I saw a lower high, right? And I saw we are, at a fib level 61.8. We did not break above 78.6. I saw this hammer. I took it. That's a perfect journal. Whether you're right or wrong, it's irrelevant on a trade by trade. And when you pull the trigger with real money, take emotions out because you have no control of what will happen for the next trade. All you can control is to pull the trigger when your chart says pull the trigger, and to exit when your chart tells you to exit. Right? So journal, practice 50 trades. When you're profitable over those 50 trades, you can take real trades after that. And then when you take real trades, very, very small size. Because real money, real emotions.
Yeah.
Different perspective.
Yeah.
Right? Until you learn to take your emotions completely out of the game, which is not easy to make. Right? That separating emotions and your hard-earned money is not an easy decision. But if you have a plan and you trade that plan consistently, eventually your emotions are going to get out of the way. The way I control my emotions is my position size. Like, even if I'm wrong 20 times in a row, I don't care because of my position size. That's how you can control your emotions.
You said you always go 2%, no more than 2% of portfolio, right?
So, yes, that's how much I am willing to risk on one trade.
Yeah.
It's different for buy and hold. Buy and hold, I'm like 100% in.
Yeah.
And I don't have I'm only going to put in the SPY 2% of my account. No, I'm putting in everything in it. Right? It's my options side that I manage by position size because I'm trading, right? So trading is different, and on a trade by trade, you could have some consecutive losses. So to mitigate for that, 1 to 2% of account size. Like if you're doing options, you can, let's say your account size allows you to lose $300, let's just say. So you can buy one option that is $300 worth and say, we don't lose. I'm just gonna no loss, no stop loss, nothing. I just let this thing goes, you can do that. Or you can buy two options and say at 50% loss, I'm cutting it. You can buy four options and say at 25% loss, I'm cutting it. But that's something that we have to discuss on how to treat options, because a 50% loss on an option is very quick. And I don't like to cut it at 50%. Like, I want the chart to tell me I'm wrong. I don't want the price of the option to tell me I'm wrong. Like, if that happens, then I have entered the wrong strike price or the wrong expiration. So we can talk about options and how to treat those options down the road. But for now, your exercise is trading view, paper trade account, go at it. Every trade, you do not take a second trade until you've journaled everything. After you journal, you can pull a second trigger while you're still in one trade. That's okay. Like, you can pull a trigger in the SPY and then go in the Qs and then in the diamonds in IWM and have 4 trades running. Which, at the beginning, I don't recommend that because they all have a tendency to kind of move in the same direction. So if you're wrong once, you're wrong 4 times. So keep that in mind. But if you just do one of them, SPY, just do SPY. Journal. If you're in SPY and you see another opportunity to enter again. Or if you had only taken 50% position and that same area of value becomes available a second time, take it. But you've journaled why you're taking every trade. To get to 50, realistically, plan for 6 months. But there's always opportunity every week, right? So you can get to 50 very, very quickly. If you do one trade a week, that's a year. But if you're trading, you don't want to do one trade a week, right? If you're really trading, you want to do like 5 or 6 as the opportunities arise. Or like they're really giving you big moves that one trade a week is significant. But get to 50. But every trade, I'm expecting that when we come and visit, on Tuesdays, we look at your journals. That's one of the things that we will look at. Why you took every trade. Why was your entry? Why you decided on that specific exit? When price hit a certain level, why did you or did you not exit? When price was not at an area of value, why did you decide to enter? Even if you are right and you enter in the wrong place, that's a wrong trade. Because it goes outside of your plan, right? You have to plan your trade and trade your plan. When you deviate from your plan, you will not have that consistency, right? You won't know why am I not having a consistent, profit run. You will not know that. So for that consistency, just have a plan and just stick to your plan.
Got it.
We'll just keep adding to this, right? We'll just keep adding to what is an area. Like if I look at this chart right now, I will tell you one thing that I am going to draw already. I'm going to draw this. This is a weekly supply zone. How come I don't have a weekly supply zone box? Okay. I'll just use this for now. When price comes here, I'm going to be extremely cautious. I'm going to be extremely cautious. So next week, we will kind of revisit those entries But then next week I want to talk about this supply zone, demand zone, how they are created, and why it's important to pay attention to them.
Sounds
Like
good.
these two areas right now, these two areas are going to be key. We have to pay attention to these two areas. This is in the futures, but you can take SPY, you can take SPX. It's the same areas, right? This area on the weekly and this area. I drew this on the daily, that's why it's much narrower. But it's that same area. So I have it, right? I have it already. It's here and here. On the daily, it's narrower because I'm looking at the daily charts.
Mhm.
But this is going to be a very significant area. This is going to be very significant. It's a matter of preference where you draw it from the open, from the bottom. It doesn't matter. The main thing is that you find a zone, right? That demand zone, that supply zone. But at least at the very least, you have to cover all this wick. Yes, I know it's confusing right now, but when I get to it next week, you'll understand why they're made, why they're there, how institutions tell us what they're expecting to do. But these are very important levels right now. We really are going to pay attention to this. This area is still above that pre-COVID high, still above it, but it's going to be key. It's at that 50% monthly retracement, going to be key. And then when price starts to resume its upward trend, what we're going to do here is going to be key again. And as you can see from futures, the elections results are not clear yet. They have not taken a direction. Okay, woo! We spent a lot of time today.
Yeah, it was a good lesson
Was
today.
it good?
Yeah, it was good. It was very helpful. This is one of those videos I'm gonna have to watch 3 times just to make sure I get all the details.
It's okay to come back every week and say, I didn't get this, let's redo it. Right?
Yeah.
Don't feel bad. I think the only reason you should feel bad is if you're not asking questions. It's okay to not get it because it takes time to get this. It's not easy stuff. Especially it involves some financial decision where emotions will kick in.
Yeah. When it's real money, it's gonna be even like knowing to follow your rules versus just using your emotions. I think you've mentioned that a few times already, but
Never you. Are we gonna make any money on this?
we'll see. At this point, I'm even considering, for now at least, after there's like what do they call it? A paper presentation for the drug in December. So if that doesn't work out, then I might have to tax harvest loss at least for 30 days.
And then get back in?
Yeah. At least the 2022 tax season, little tax harvesting.
On this one, I just took a option position. I don't know
What'd you
how
take?
far out I went, but I just took an option position.
Did you like base it off any like technicals or just like?
No. Just this has nothing to do with technical, right? This is speculative.
Yeah. Yep.
Purely speculative. So it goes up or down. There's no in between.
Yeah. Either a drug works out or it doesn't.
Yeah.
But if you
it's
go
a small
back,
position, right? It's a small position that you take on this kind of things.
yeah.
Purely speculative because it's maybe they get a good report out and then it takes off.
Yeah, exactly. If it feels like, I don't know, the moves are so wild on it too. It's like it builds up, and it recovers back, and then within like 3 days it just gets hit. If you go back to
Yeah, so it does this, it
yeah,
collapses, it does this, it collapses, right?
yeah,
So it's like that's how it is when you're in anticipation mode.
yeah,
But historically, we we started way up here. Could we
yeah.
get back up here? I don't know, but we get to 50, I'm happy.
I'm happy if we get to 20. Because
Yeah.
I entered at like low, like 805 or something, and then we went up to like 12 or 13,
Yeah.
and then now, yeah, it was a quick reversal.
Yeah. I think so. I bought it somewhere down here, like when I bought the options.
Yeah,
So, and if it goes to zero, I'm not gonna lose sleep over it.
yeah,
Yeah.
yeah. If it goes to zero, then it's one of those wild throwing dart at a board.
Yeah. All right. I think it's good for today.